Welcome back. NBFCs are surging as we speak, particularly the housing finance companies. So in Indiabulls Housing Finance now has a double-digit gain, a gain of 11%. They have been beaten down quite a bit in the last couple of weeks. So for Indiabulls Housing Finance, it was a fall from levels of 1,400 and now it's at 750. Dewan Housing too is moving up as we speak. So that's gained close to about 2.5%. Canfin Homes. In fact, generally NBFCs are also high. So Shrey Infrastructure has seen a rally of close to about 6%. But this is after a 70% fall that it's seen in 2018. Numbers coming in, KPR Mills has reported a 12% growth in the company's revenues to come in at 689 crore, a 30% increase in the company's EBITDA on an absolute basis to come in at 145 crore, which puts the margins at 21.1%, an improvement of 290 basis points on a year-on-year basis. The stock is reacting positively to those numbers. Net profit jump of 30%.
So it's a textile company, so they will benefit from, a lot of the rupee depreciation, so exports doing well. And additionally, what has happened is for KPR Mills, a higher proportion of revenues is coming from their garments business, which is margin accretive. In fact, garment revenue this quarter has been higher by about 26%. This compares with a total revenue growth of about 11.7%. So that explains why we're seeing that sort of margin expansion, higher share of revenue coming in from a product that gives them higher margins, as well as weaker rupee aiding their realizations as well. So the stock up 4% and good set of numbers coming in. But let's move on to answering your stock queries. Joining us today to help us and help our viewers in terms of their stock-related queries and investment queries, we have Gaurang Shah as well as Prakash Gaba. Thanks a lot, gentlemen, for joining in. So let's take it straight to our caller. Santosh Pawar calls us from Mumbai with a query. Santosh, go ahead.
Yes, sir. I'm Santosh Pawar here, so from Mumbai, Ghatkopar. I have a query. I have a 150 quantity in Union Bank of India, and my average value is 150 rupees.
All right.
So I just wanted to know, this is the right time I am again average, or should I hold or wait?
Okay, it's one of those moves in all PSU banks that we're seeing today. It's up 11%, but it's still down a considerable bit from where you bought it, Santosh. Gaurang, I'll pose this question to you. Union Bank reporting its numbers today, but all the PSU banks are moving higher today. That's just a daily move. From the time Santosh has bought it, it's down about 50%.
Thanks, Mangalam, and good afternoon to all of you all. So, we remain positive on certain select PSU banks on fallback of historical high recapitalization, insolvency and bankruptcy code, NCLT, and of course the resolution which are coming in thick and thin, and most possibility our view is that you will have more resolutions at a faster rate. This should definitely improve the balance sheet or health of the public sector banks. He got in at 115, stock is trading at 69.70. From a long-term point of view, I'd advise him maybe, average 50-60% at current levels, and we would definitely see a profitable exit. But it's very prudent that he should average and hold on. And of course, there is huge, merger that is going through and likely to go through after the announcement made by the Honorable Finance Minister, consolidation of public sector banks. This could be one of the beneficiaries as well.
Okay. By the way, Wonderla numbers are not looking good. The company's reported a 16% drop in the company's revenues, and that is driving a top-down miss. Consequently, the margins have come in lower by 50 basis points year on year, and that is driving a 60% drop in the company's profitability. Colgate numbers on your screen, bang in line with expectations. The net profit has come in at 196.5 crore, which compares with the CNBC TV 18 poll of 200 crore. So at least on the bottom line, it's in line with expectations. The stock is reacting positively, a gain of 2%.
Volume growth is coming at around 7%. The street was working with anywhere around 4 to 5%. There we have it on the flash, and which is what is taking the stock higher. Add to that, I'm just trying to take a look at the market share. Okay, the company's volume market share is at 52.5%. The last quarter, it was 52.4%. The street was waiting for this number itself. I would get the ticker team to flash that. The volume market share for toothpaste stands at 52.5%. So there has been no further worsening out there. That was the big fear that the street had. Not only has it not worsened, it has mildly improved. So let's see where this trend goes right now. 52.5% market share is something that the street will like. 7% volume growth, aiding aiding the further up move that we're seeing on the stock as we speak right now. The results, the reported results, absolutely in line with our expectations, and that is what the street was working with. However, internals are looking fairly strong. So the top line margins, net profit, absolutely in line. Volume growth is the big positive, but the bigger positive is the fact that there has been no worsening in the company's volume market share. That has increased a tad bit, if you must, 52.5%. This compares with 52.4% in the previous quarter. The street was worried about the market share loss that the Colgate brand had seen over the last many quarters. In fact, last quarter, 52.5% was at a multi-quarter low, perhaps could have been the historical low as well. So no further worsening in market share as well as volume growth uptake is what the street likes, and the stock up about 2.5%. In fact, incidentally, we had a query in on Colgate itself. All right, before we do that, we slip into a short break, come back and get you some market opinion coming in from Monish Babrai.
Look at things from a sector perspective, and I don't think investors should look at sectors. Okay. I think the focus ought to be specific businesses. Yeah. Because there is a lot of difference in the way a Kotak performs versus a J&K Bank performs. Right. I mean, the sectors don't mean much. I think you have to get down to particular businesses. And I think it'd be a mistake to say that I have an interest in the agricultural sector, or I have an interest in the auto sector. I get interested in particular businesses with particular nuances. And I got interested in Kaveri for very specific nuances, which we will discuss, Nigel, after at some point when we no longer own it, which is probably a long ways off. They are in a business with some cyclicality, and the cycle was at a very low point, but they're also a low-cost producer. So when they have a cold, the rest of the industry has pneumonia. And so Rain actually would have a hard time losing money. Okay. Because by the time their margins get slimmed down, the rest of the industry starts losing money and capacity gets taken out, which corrects the situation. So in the situation with Rain, I thought in 2015 there was a very high probability that in the next 3 or 4 years, the net income of the business would exceed the current market cap. And that actually has come to pass. So now that it's a company that makes around 10 rupees a share a quarter, and we paid about 35 rupees for the stock. And so you do the math on that. Yeah. And so we like the business, we like the management, we think they're very good capital allocators, and we're going to sit in for a while.